Putra Adhiguna is Managing Director of Energy Shift Institute. He's joining us live from Jakarta right now. Thank you so much for joining us, Putra. The first question is really from your vantage point in Southeast Asia, how would you really characterize the severity of this current fuel crunch? Are we looking at a short-term shock or something that's more systemic taking hold?
Yeah, good morning, Ella. Thanks for having me. I think the crisis that we're facing today, it's important to note that in terms of scale, it's actually much bigger than what the world faces in the 1970s. Right now, the world lost about 15% of the global oil supply. That's at least 2 to 3 times of what had happened on the last biggest crisis that's happening. So I think the effect will be quite some time to be unwound. It will take quite a bit of a time, and we need to kind of distinct the separation between stoppage of oil flow and gas flow. And while the other side, there's also facility damage that's happening in the Middle East. And I think Southeast Asia is quite exposed to both risks.
Right. And in that context itself, what indicators are you watching most closely right now? When would you expect pressure to really ease, if at all?
It's very hard to tell because, frankly, since the attack of the US into the Middle East and Iran, really the one that's holding the decisions has been moving around, right? I mean, at one point it was the US and the Israelis, and now Iran is seeming to have the high ground in when the conflict will end. It's very hard to tell, but I think it's important to note that the effect of similar oil crisis will be compounding. Every single day and every single week that the crisis prolongs means that there's more and more millions of barrels that are being lost, and it will take even more time for the world to recover. This is even more so in Asia, as we know that about 80 to 90% of the energy flow coming out of the Strait of Hormuz actually goes to Asia, whether it's China, Japan, East Asia, and also Southeast Asia. So we are seeing quite a bit of a crisis developing. Philippines just announced their emergency of energy supplies, especially with their reliance on the Middle East. It's important to note that the reliance on the Middle Eastern supply is not similar across the board. Some countries are more diversified than others. Some has, more diversified oil source, some and the gas source, and so forth. So I think the effect will take some time to ripple through. But it's also one last thing is that it's important to note that what's happening in the oil price within the US and other places are diverging. So when people say, the oil price is not really that high, we need to take into account that there are the paper trading side and there's the physical restriction side. The world has never seen a crisis of such scale, so it may take some time for it to come into realization for the market to adjust.
Yeah, absolutely. And in that, phase or the context that you just shared, in Philippines alone, we're seeing transport workers taking to the streets. What does that really signal about the tipping point between economic pressure and social unrest in the region, especially since you said physically or even realistically, this can be tough to the layman?
It will be quite tough, and especially in the Philippines, we've noticed that Philippines fuel prices is one of the fastest that increased within the last 4 weeks in terms of the region as well as globally, which means that, if you're somebody who's trying to buy a gasoline at the petrol station, and as Philippines adjust their weekly fuel prices, they can see the price going up and up and up and higher. Philippines' energy market is also one of the most that is deregulated, which means that while other countries may step in through subsidies, state interventions. Right now, the Philippines are just about to do so. So which means that, again, the consumer is feeling the ripple effect much faster than the other places as well. I think it was mentioned earlier, 98% of Philippines crude imports come from the Middle East. Now, a lot of the products, which is usually diesel and gasoline, come from other places like China. But then we also heard the fact that China restrict the export of their fuel, which means the effect is happening on both sides for the Filipinos.
And we just heard Mr. Marcos announcing a $333 million emergency fund to handle this crisis in Manila, declaring a national emergency. In terms of energy, what concrete actions typically follow such a declaration, and how effective are they in terms of easing immediate strain?
I think it's an important signal to be sent out that the government is stepping in. The amount is not exactly very large, frankly speaking, for Southeast Asian countries of Philippine size, but I think it's the signal that matters. Some of these amounts seems to be about securing supplies. We've noticed that some of the Emergency Act means that procuring oil can make more down payments and so forth. So I think it will ease out some of the near-term supply, but again, the longer the Hormuz Strait goes, crisis, it's going to take some time. There is no easy cure on this. Pulling out a bit on Southeast Asia, places like Malaysia and Indonesia are burning quite a lot of money every single day, in the orders of tens of millions of dollars to subsidize and shield the consumer. So it's good to see that the Philippines is starting to step in. It's also good to see that they're also working with the US government to try to figure out other options as well, like accessing the sanctioned oil.
Right, and if we look across Asia, where are the pressure points most visible right now? And are there, early warning signs that could that kind of like signal that this could spill into wider economic instability?
I think we're already seeing it right now, and that's why I started this point highlighting that a lot of people seemingly staying calm, looking at the global Brent price, that the global crude oil price that many people refers to. But at the same time, we need to make a distinction that there are different oil prices in the world. On a normal condition, all oil prices are similar, but right now we're seeing crude prices in the Middle East escalating much faster than the global Brent oil price. So the impact is already rippling. I'm calling it rippling because what tends to happen is that the effect happens at those countries most exposed, and we're already seeing it happen in India and now reaching Southeast Asia. It will take some time because it does take time for tankers when they ship from the Middle East until they land in places like Southeast Asia. It may take 2 to 3 weeks. Now, 2 to 3 weeks has passed. So it's really what's going to happen within the next few weeks that also determines what's going to happen. Globally speaking, there has been quite a few actions taken through global coordinations. There's a global release of the oil stockpile, which is, by the way, is the largest in the world's oil history, which means that in terms of supply side, many energy planners are panicking in terms of how do you stabilize the global market. So we're probably going to see more ripple effect coming up within the next 2 to 3 weeks. Hopefully the conflict would be resolved, but even if the war ended tomorrow, it will take some time for things to getting adjusted.
No, thank you very much for sharing your insights with us. Putra Adhiguna, Managing Director of Energy Shift Institute.